Hello, good afternoon, everyone. Good day to you, wherever you may be.
Yes. Yeah. Hi, Sarifat.
Hey, Anil, how are you?
Very good. Very good. Very good.
That's good.
Yeah.
That's good.
And good afternoon, everyone. Just we're waiting for a couple of minutes just so people can join. Yes. Let's start. And good afternoon, everyone. And thanks for joining on this afternoon. Um, Today, I am not seeing my full screen. I cannot see my face.
I can see your face, Anil.
Your full screen? You can see? I don't think so. Hmm. Okay. Anyway, so let's get into it. And good afternoon, everyone, and thank you very much for joining. Today, as usual, we are with my team, and my name is Anil Grandhi. I am the CEO of AZ FinTax. Along with me, our my team member Serifat is also here. She's a tax manager, and we both will be going through our today's presentation: R&D tax credit, research and development tax credit. Yeah, let's get into the presentation. So So today, very brief about me. Very brief about me. If you are hearing me for the first time, so this is the background about me. So I have 20 plus years of experience in the core tax, accounting, and finance fields. I work for Amazon, Starbucks, PricewaterhouseCoopers, and Sun Edison, and I have been serving as a Forbes Finance Council member. We are based out of Dallas, but we have the business presence in all states of America, and we are expertised on tax planning, tax filing, bookkeeping, CFO services, R&D tax credits, and also CFO and also India compliances. And with me, even I am alone. Even me and Serafat is here, but still we are supported with a very big team. We are 100 plus employees in India and US together, and we have many CPAs, chartered accountants, and other finance professionals. And today, our manager, tax manager Serifat, is going to drive the presentation on R&D, and she is and I am based out of Frisco, Dallas, and Serifit is also based out of Irving, Dallas. So we both are in Dallas based, but we serve clients US wide. And today, whatever I'm sharing, the knowledge, we are only just sharing our knowledge with our community. Please just check with your accountant or CPA, or at least schedule a one-on-one meeting with us to ensure that those whatever recommendations we are giving, those are applicable for you. And also our approach, our we are as mentioned, we are we are expertise on offering professional services, and we have been working as a team along with a lot of CPAs, chartered accountants, and other finance professionals. And our approach would be collaborative and consultative approach, where we assist with the heavy lifting of detailed science driven solutions required to minimize tax efficiencies. This is what our expertise here. And in today's agenda, we are going to talk about what is an R&D tax credit, a overview of that, who is eligible, what does mean qualified research expenses, what does it mean in the environment of IRS, And we will also take a case study of a software industry, how it works, how much tax credit you may be getting. All the way we will go we are going through a detailed case study there. And section 174 tax deductions, which is apart from R&D, one section 174 also can be applicable for you. And we are ready to take up any Q&A questions and answers. Question, if you have any questions, feel free to post your questions on the chat box. Feel free to post your questions on the chat box. We would love to answer. If you are watching this recording later, still feel free to post your questions on the comments box in the YouTube. We would love to answer all your questions.
Or they can send an email to lo at
Yes,
agfintax.com, or give us a call at 469-222-6644. You can see the
excellent.
email at the bottom of your screen or the phone number at the bottom of your screen.
Excellent, Serifat. Thank you. And Serifat, floor is yours. You can go through, and I will continue to add my comments as you go through this. Thank you.
Okay, sure. Thank you, Anil. Hello, everyone. As Anil mentioned, my name is Sharifa Remu. I am the tax manager here at AD FinTax. Today, I'll be walking us through R&D Section 41 as well as Section 174. So now let's get started with R&D Section 41 first. What is the R&D tax credits? This considered a credit by the federal government to provide companies with tax incentives, with such as dollar for dollar cash savings for performing activities, technical activities in relation to the development, design, or improvement of business components in terms of product, process, formula, software, technique, or invention. What are the benefits that you can get from the credits? For a taxpayer, some of the benefits would include getting up to 10% of your investments in qualifying research expenditure. Then you can also get, like I mentioned earlier on, it's a dollar for dollar incentive that you can use to minimize your tax liability. Then also it gives you, increase on your ROI. Besides that, you also can improve your earnings per share based off of that. And it is open to 1 year prior carryback in terms of, if you look into 1 year before, you can carry it back 1 year before, or 20 years going forward. If you carry it here for 20 years, say for instance, you don't have the capability, you don't have the tax liability to offset your credit with, since it is not a refundable credits, you will have to carry it forward for about 20 years. And if you don't use it by the end of 20 years, you will lose it. So, but most of the clients, most of the taxpayers I've worked with, they were able to use it ahead of time, before it elapsed. And some have misconception that
One.
S corp or partnerships do not, cannot claim the credit. That is totally not true. They can actually claim the credits because it will flow through to their owners. And also, besides the federal credits, many states also offer the credits as well. I know you want to come in.
Yes. Yeah, just adding to a few more. So in simple summary, up to 10% of your total expenses, qualified research expenses, what is the definition of the qualified research expenses, we are going to cover in the next slides. But whatever money you are spending, if they are qualified, 10% you can get it as a tax credit. The tax credit is a dollar to dollar credit, which will be directly adjusted with your total tax liability later. And also, the S corporation partnership can also go and claim this R&D tax credits. And if you don't have any, these credits can be adjusted with your tax liabilities. It can be your income tax liabilities or payroll tax liabilities. If you don't have any liabilities, still this credit can be rolled over for the next 20 years to adjust with any. If you are running a startup company, you might not have a profits at all, so then there is no income tax liability at all. Then we still recommend you to go and claim these credits, so that these credits can be adjusted with any future tax liabilities. So this is one of the great way. A lot of people are still short of some knowledge on this R&D tax credits, but we are going, we'll go in detail now. Yeah, thank you. Sirifat, go ahead.
Okay. Alrighty. So now, how would you know if you're eligible for the credits? How would you know if your activities would allow you to claim the credits? IRS provides some criteria that needs to be met to determine the eligibility for the credit. It is universally known as the four-part test, especially for non-internal use software. So the four-part testing here talks about the criteria that you have to meet. So the first one here talks about permitted purpose, which it talks about your activity must relate to the development or improvement of an existing business component. If it's something new to you, it doesn't have to be new to the world. It doesn't have to be new to the industry. So if it is new to you, new to your employees working on it, that will satisfy the requirements of it being new. But if it's an improvement, definitely you must have something in existence that you're trying to improve on. Then, if it's an improvement, the improvement must come in form of its functionality or performance, reliability, or the quality. So if you're able to, improve on any one of these, at least one of these four, then you're able to meet the improvement um, in terms of the permitted purpose, the improvement purposes, and that would make you qualify for that particular criteria. Now, the second criteria talks about technological in nature, which means that whatever you do, it has to be backed by hard science. It could be physics, it could be physical science, it could be biological science. Biology could be chemistry, chemical science, it could be engineering or computer science. It has to be hard science. Anything like economics, mathematics, social sciences would not fly with the IRS. It has to be hard science. Now, and since most of you will probably be in IT industry, then that is something that you can easily meet. Then the next criteria talks about elimination of uncertainty. And what this simply means is that while you are working on your project, you're working on your business components, you are trying to discover some information that will help you eliminate your concerns related to if you're capable of achieving your goals or what method or design you would need to implement. You could know what you want to do at the initial stage. You know how to get from point A to point B, but along the line something threw you a curveball and you didn't know how to resolve that. So that would be your uncertainty right there. And with that, it has to be something backed by technology. It doesn't have to, it shouldn't be something related to maybe financial constraints. It has to be technical constraints in terms of capability. Are you capable of achieving your goals, or what method or design you would need to implement? Now, the next one talks about process of experimentation, and that simply talks about the ways or anything you did whatsoever that helped you mitigate the technical uncertainty that we just talked about. It could be prototyping, it could be modeling, it could be simulation, it could be trial and error methodology. Anything at all you did whatsoever that helped you overcome those technical challenges will be your process of experimentation. The thing is that the IRS wants you to have at least two alternatives considered. Why they didn't necessarily provide, the number of alternatives for you to consider? They just said, okay, at least more than one alternative. So, which means in simply terms, at least two. If you have at least two alternatives considered, you're trying to compare and contrast. Okay, this methodology, what are the benefits of using these? What are the cost of using these versus this one? So at the end of the day, you would choose the one that gives you the optimal results, and that would you will be able to meet the four-part test with that information. Any input on this?
Yes, yeah, thank you. And it's very important is the 4 part test. So you have to meet all these 4 tests. So and one of the most important thing is uncertainty. There should be an uncertainty of your research. That may you may win, you may not win. That uncertainty has to be there. Where whenever you're doing a research and development, that is a mandatory that there should be an uncertainty. So you are doing this research to eliminate this one of the condition, one of the part of the test is elimination of uncertainty. Okay, but and also it should be an experiment, it should be a process of an experiment. So and yep, that's it, Serifat. You already covered it in detail. Thank you.
Okay, alrighty. So going forward now, after determining the qualified activities, how do you claim your credits? What's included? So to determine your qualified research expenses, we look into about 3 to 4 buckets of cost, but especially for IT or software industry, most likely your bucket of cost will be limited to 3 as opposed to 4. You will see that the reason why I say that along the line. The first one would be, and usually, which is usually the biggest one, is the wages. The W-2 box one, the taxable income of your employees or the people who worked on the research effort, on the qualified research effort. Or in case of a partnership, or if you're subject to SC tax, which is self-employment tax, that could be guaranteed payments as well. Then the next one is supply cost. Any tangible property used or consumed in the line of qualified activities would be considered. But that excludes land acquisition and improvement, depreciable property, or of general office supplies and consumer stationery. Those wouldn't, qualify because that would be considered overhead or something. So they wouldn't be qualified for the research efforts. But like I said earlier on, these supplies would not necessarily be something you would use in the software industry. So now the next bucket of cost will be rental or lease cost of computers. And this is not necessarily talking about a physical computer out there. It could be something like a cloud storage. So maybe you paid subscription, you subscribe to cloud storage specifically for R&D purposes, and it's not like all or nothing. If you're using this in your day-to-day activities for your business, and you're certain that you also use a portion of that for your R&D activities, we can carve out that portion to include in your credit calculation. So that's why I said it's not all or nothing. So the fourth criteria here is the contract research. This is about the third party contractors. You have those people who are not on your W-2. Maybe you do not have the capability in house to do some testing or do some design or write some codes, and you have to engage the services of a third party. Whatever you pay to them, we can also include about 65% or whatever you pay to them in the calculation. And this does not have to be a complete vendor in terms of you going to an LLC or you going to a different company. You could have people, you have personnel on 1099. They will be considered a third party contractor as well, since they were not on W-2.
Thank you, Serifat. And just adding to a couple of points in simple summary here, wages. If you are paying salaries to our employees, they come under qualified research as long as those they are US based employees. And if you are incurring any expenses for the supplies, supplies including tangible property, okay, so that is also part of this, and as a part of these expenses, research expenses. And also the very important, you might be outsourcing some work to some outside consulting companies. So if the work was delivered in US through the sources of through the work resources in US, then the 65% of the payment, whatever you have done to the contractor, that is also included here. So these are the different types of qualified research expenses. You need to identify all these eligible expenses and find out how much money you spent on those expenses. This is one of the steps here. Yeah. Go ahead, Siri.
Alrighty. So I think I moved too fast. Let's go back a little. Yes. Okay. So the next here is who qualifies for the R&D tax credits. If you will recall from the previous slide, I talked about um, the employees who are on W-2, and I also mentioned supplies, I also mentioned third-party contractors, as well as cloud computing. But out of those four buckets, only two buckets were related to human beings. So that is why I prepared this slide saying that who qualifies for the credit. It will be any employee who performs, who directly performs qualified activities. Any employee who directly performs the qualified activities. And the R&D credit is based on such a way that we're able to look into the employees in three subcategories. We'll look at those who directly perform the qualified activities, those people will be in the middle. And we go one level above them, that would be anyone who directly supervises the direct performance. And we go one level below them, those will be anyone who directly supports the direct performers. So the direct performers will be in the middle, one level above them, one level below them. IRS does not allow us to, go for supervisor of supervisor, because those people will be far too removed from the process, as well as, support of direct support. They'll be far too removed from the process. And for the direct supervision and direct support, so in as much as they are supporting and supervising the direct performers, these two categories, they do not meet the four-part test. If you recollect the four-part test I mentioned earlier on, as the when we're trying to determine the eligibility, if a taxpayer will be able to, claim the credits. So now, the second category on this slide will be the outside contractors. So we've talked about those employees who are on W-2. Now, the second category of people will be the outside contractors, outside service provider. So any amount you pay to them, 65% of that amount would be included in the calculation, not 100%. But for the employees, it will be at 100%, of course.
Got it. Thank you, Serifat. And here, so the technical, in simple terms, the employees who are working on the project, maybe they are developing a coding, or they're writing a code, or in the entire project, whatever work they are doing, if they are working dedicatedly for that project, they are qualified. And not only the employee who directly works, directly who is supervising, like a CEO might be supervising the employees to some extent, how much time actually he's spending for the employees, and supervising it, or the subordinates who are reporting to those direct resources who are directly working on the project. So one side up, one level up and one level down also can be considered. So we need to evaluate in more detail, and person to case we need to evaluate, then we need to confirm whether they are qualified to calculate the total expenses or not. And our contractor expenses, we already discussed on this point. Just whatever money you are paying to the contractors, 65%. If it is a full-time wages, 100% of the cost. If it's a contractor, it's a 65%. Go ahead, Sarah.
All righty. Thank you. So in here, there are some myth, some reason why, or some misconception why some of the taxpayers wouldn't go for the R&D tax credit. Some people would say, it's too time consuming. If that is your limitation, that's what is limiting you from claiming the credit, that is why we're here for you. We'll do the heavy lifting for you. You don't have to worry about it. Some people will say, okay, we don't track our time. It's okay. IRS does not specifically, ask taxpayers to track their time, because the IRS gives the opportunity for management estimates. So our work is not documented. So while contemporaneous documentation is good, we can still make an argument in support of your claim by making sure that our reports are definitely audit ready to support it. We are not making any profits. That is completely fine. If you would recollect, when we talked about how long can you use your credits. If you're not making profits at this time, you're in a loss position, you carry forward your NOL, you can also carry forward your credits by 20 years until you start making profits, and until you start being taxable position, then you can now use your credits to offset those tax liabilities. We are a S corp or a partnership. Your credit can flow through to the owners, can flow through to from your company, pass through. It can flow through to the individuals. Our researcher funded. Yes, this is something of concern, but if there is an economic risk, say for instance, you're being paid by a third party to do this research, but your failure would require you to pay back, then you can claim the credit because there is an economic risk for you there. It will trigger, the next one says it will trigger an audit. In itself, it's not I wouldn't say that is a force, but at the same time, IRS can pick up anyone's tax and audit it. So with or without the R&D credits, a taxpayer tax return can be audited. The last one talks about we have our process is not innovative enough. That is one of the concerns that some taxpayers have. But I would like to let you know that that shouldn't be a concern because whatever it like as when I was explaining the four-part test earlier on the permitted purpose, it does not necessarily be something new to the world, something that we haven't heard of. If it is new to your company, it is new to you, and that simply uh satisfy the requirements of the as one of the four-part tests. So it doesn't have to be overly innovative. So far you can, demonstrate that it is new to your company, it is new to the employees working on it, that would definitely fly. So you don't have to, worry about it not being innovative enough. Anil, any points on this?
No, I think you are covered good. And so I think yeah, no, sorry, but I think you covered it good. Yeah, please
Okay,
go ahead.
all right, I can move forward to the next one. So IRS R&D environment. Last year, there has been an updated new requirement for taxpayers who are amending their return. Um, as you may know, there is 3 years statutory requirement for you to go back for open years to go amend your return. And if you're amending for those period of time, there are some new requirements that IRS has put out. In the past, they would actually ask for more information, more data than this. But based on the feedback that CPA firm were, giving the IRS, I think they came about saying that they eliminated two of those requirements, making it three. And one of them is that identifying all the business components that results in the credit amount for the credit for the year in study. For each component, though, you have to identify all the research activities performed and also provide the total employee wages, anything, all the three or four components that leads to the research amount, that leads to the credits. So in terms of the QRE, all the qualified research expenses, for the wages, you have to identify it separately. For the supplies, the rental or lease of computer, or the third-party contractor. So also, IRS is, asking the taxpayers to make efforts to effectively allocate its limited resources to determine which procedural compliance claims to examine. But the thing is that IRS does not provide guidance on um, sufficient information. They didn't provide that. But with our expertise, we are able to let you know and support you to determine which information we know and believe that will be sufficient, because the IRS is, silent on that. I think Anil may be having some technical issues, but we carry on. And if he joins us later on, yeah, we'll see. So I'm going to move forward on this. So now, IRS is such a big, R&D is such a big tax credit, such that it Tons and tons on industries are claiming the credits. We have aerospace and defense claiming the credits, architecture and engineering, automotive, automobile, chemical engineering, software development. We have tons and tons of industries who are claiming the credits. Energy and gas, oil and gas, some printers, cosmetic and skincare, pharmaceutical companies, drugs company, manufacturing company, even cryptocurrency, metal fabrication, plastic and rubber, printing, a whole lot of industry are going for the credit because it's such a big incentives. Moving forward in here, um, I have the breakdown of software industry of some type of activities that could qualify. And this is not to show that it's limited to what you have on the screen, but I just try to come and give you some examples. So development or improvement of external software, external use software. Maybe you're creating the software for sale, for lease, or to license to third party users, but it shouldn't be it's not limited to mobile apps, cloud-based applications, legacy applications, software as a service, but for internal use software as well, because you can have a software for sale that will generate money for you as well. You can also have internally used software whereby you created a software to help you with your day-to-day running operations of your company as well. So, it could be something related to facilitate a service. It could be a B2C or, B2B kind of software. Moving forward on this one, I have some examples of the qualified activities, you know, for the R&D, for the software industry. It could be, when you're analyzing the requirements as you're trying to understand your clients or your software scope or specification and requirements. Then after that phase, you can move to design and prototype creation, where your understanding of the specifications is being turned into draft design. Then after the draft of the design, you will go to development, trying to create a functional software. And now you go into testing, find and resolve error. This is where the debugging could come into play, trying to see if there wouldn't be error that you couldn't catch during the coding stage. Then after that is cleared, you go live, you deploy that, you put that into deployment, finalize code, implement it into software, and deliver to customers. Then inherently, you cannot dust your pen on that. You have to keep improving it. That is where, if you would recall, when I mentioned earlier on in terms of the permitted purpose being that you're trying to improve on an existing business component. So you could be enhancing it after it has gone live. So this is where the improved business component comes into play. Anything you do to sustain the performance or the reliability or the functionality of the software will be the enhancements. Moving forward, I have some activities that wouldn't qualify as well. So anything done outside of US would not qualify. You may have a US resident, a US person, a US citizen, or alien green card holder, so to speak, go overseas to go work on research efforts. That wouldn't qualify for the R&D tax credits. But if a foreign national comes to US or to work for you, you have an expatriate coming onto the US to work on qualified efforts, that whatever you spent on them would qualify. And this is applicable to both um, employees on W-2 and third-party contractors. Developing software that replicates a procedure previously done, that wouldn't also qualify as well, because you were probably trying to do reverse engineering and IRF frowns upon that. Routine maintenance does not also is not also qualify. Post release bug fixes, if you're debugging after it has gone live and does not necessarily lead to any technical challenges, that wouldn't qualify as well, because it will may fall under routine QC testing. Then user interface for cosmetic design only, that does wouldn't qualify as well. And if you're trying to do some plug and play, trying to see, and this is not something like um, inherent try and error methodology. If it is just, plug and play generic turnkey solutions that is not customized in any way, that wouldn't be something that would qualify. Next in here, I have an example of, just for you to see what the credit might look like. So say, for instance, you have four programmers who were, writing codes, and on average, you paid each one of them about 150,000. So summing up to 600,000 in terms of box one amount. So they're eligible and they dedicated 100% of their time on R&D. They dedicated 100% of their time to qualified research activities. So their eligible amounts will come up to 600,000. And you have QA testers. So QA testers, if you recall from what I mentioned earlier in terms of three subcategories of the employees working on R&D, we have one level below, one level above. So the four programmers in this case will be the direct performers. So the two QA testers will consider the one level below them, which are directly supporting them. And let's say on average, you spent 120 each on them, and they were dedicated to qualified activities at 50% of the time. They were doing some other routine testing that wouldn't qualify. So the qualified time spent was 50%. So the eligible amount would be 120,000 now. And you have two supervisors who are above the direct performers, and on average, you pay each one of them 180K, and they were involved in the process in qualified activity at up to 20% of time. So that would be about 72,000. So if you sum up 600, 120, and 72, that sums up to 792,000 in eligible payroll, eligible wage QREs. And now let's say you have about 171,000 in third party contractors at 65. So at 65% comes up to be 171,000. And you have eligible cloud hosting expense as well, coming up to 37,000. And everything sums up to be 1 million in qualified expenses. With that, you would have a potential credit of 100,000, because if you would recall when I showed you that you have about 6 to 10% of your return on qualified expenses. So about 10% or 10% of 1 million will be 100,000. That will be the potential credit you may be getting. So moving forward, I also have R&D tax credit study life cycle. So at AG FinTax, when you partner with us to do an R&D study for you, our approach is usually trying to get project scoping. We will give you a free estimate of what your credit will look like, what your credit amount will be, and that is completely free. There's no obligation. You don't have to pay us. We'll let you know. We'll give you a range from between X and Y. This is what we're thinking your credits would be, and we can let you know how you can use that credit based off of your tax filing history. And with that, you can determine or predict your return on investments. So now, after we give you the estimate and you give us the job, then we go into the credit analysis phase. And that is actually broken down into two categories. We have the quantitative analysis as well as the qualitative analysis. The quantitative analysis is related to we trying to determine how much your credit would be based off of, uh, our interview of you and review of your expenses and how much time your employees or third party contractors spent on qualified activities. The second aspect of that, like that I said, is the qualitative analysis would be us, talking to your subject matter experts, trying to determine the technical details of the projects, of your activities, to see, how we can support you and put some documentation, contemporaneous documentation together, so for our for to be audit ready for a potential audit by the IRS. So after that is done, we do the credit delivery, and that is where we do the filing or send your Form 6765 to your CPA and have a wrap up discussion, lesson learned. What if we determine there is something you need to implement that will help your situation going forward, we'll also let you know. So we always have the wrap up discussion with you and your CPA. And audit support, usually we would prepare your deliverable to you in such a way that it is audit ready. And also we are also with you in case you receive an IDR from the IRS or any notice from either IRS or even any state taxing authority. We will be there to support you. Next in here is about, and that was about one section 41. Now I'm gonna talk about section 174. There are some new rules in place. Um, as of December 31st, 2021, the IRS stops and disallow the position of taxpayers taking 100% of their section 174 deductions. So instead of the taxpayer to deduct 100% of section 174 expenses, what the IRS says was that you'll be able to, amortize it. Well, don't let me jump into that first. Let's talk about, what Section 174, what is it about? These are considered research and experimental expenses, research and development costs in the experimental or laboratory sense that are incidental. These are the costs that are incidental to the development or improvement of a business component, of a product or a service. It is more expansive than Section 41 QREs because the Section 41 is limited to only the wages, supplies, rental or lease of computer and contract research. But Section 174 is more expansive than that in the sense that it includes all of these for the wages, supplies, contract, lease or rental of computer, and it also includes utilities, depreciation, attorney fees, and overhead costs. It also includes that. And the ultimate success, failure, sale, or use of a product is not relevant to determination of eligibility. So what that means is that if you're developing a software and at the end of the day it wasn't a success, it doesn't affect your Section 144 deduction. It does not. You're still eligible for the deduction, same as the Section 41 for the QRS credit, for the R&D tax credits. Moving forward in here, so like I was saying, starting January 1st of 2022, Section 174 expenses are no longer to be deducted in the year they were incurred. For domestic expenses, it has to be amortized over 5 or 6 years. And I say 5 or 6 years because the first year it has to be at the midpoint of the taxable year. You would take 10% for the first year. And for second to fifth year, you would take 20% each, making 90%. Then the remaining 10% from the first year will be, deducted on the sixth year. But if it were to be a foreign expenses now, and let me make a point quickly. For the section 41 that I mentioned, and for the R&D that I mentioned earlier on, anything not done on US soil will not be considered. That is not the same for section 174 expenses. Section 174 expenses actually allows for foreign expenses to be included. But the thing is that instead of amortizing the foreign expenses by 5 to 6 years, it will be amortized over 15 years. That is the only difference. So you don't get to recoup your expenses as soon as possible. So specifically for software development industry, there is a rule that the government put out that you have to, according, it's Ref Prox 2000-50, it says that the software development must be capitalized and amortized regardless. So that's a new rule. It has to be whatever expenses you have on section 174 for software development, it has to be capitalized and amortized. And after you dispose it, you retire it, you abandon it, regardless of what you do to that business component, to that software, you must continue to amortize it. So I believe that is everything I have for you. Okay, no, one more thing. Yeah. Why you should, work with AG FinTax? Why you should work with us? We are such a firm that will give you free assessment, like I mentioned earlier on, to determine your credit eligibility. It is free, it is complimentary. You're not obligated, even after the free estimate, you are not obligated to work with us on that. And the second criteria, the second reason you may want to consider us be we have extensive tax credit expertise on this that can help you maximize your tax benefits. So, we perform this study, assist you with applying the credits as well. And we have a deep technical experience in R&D tax credits to help you, capture, maximize your credits and capture your, ROI. Also, we have a full audit support for you in an event of IRS or any applicable state taxing authority audits. But the thing is that that is subject to some terms and conditions. Anil,
Thank
you're
you.
back.
Yes, thank you. Thank you, Saripat.
No
And
problem.
how AG FinTechs can help here? We come up with a lot of expertise and experience here. And our tax manager, Serifat, has more than decade of experience only in research and development tax credits claiming. We are here for you to analyze all your details, documentation, and see if you are eligible or not first to claim R&D tax credit or not. If you are eligible, then we can sign up a agreement with us. Then we can start helping you. We can serve you in claiming the maximum dollar legally possible ways to get to claim this R&D tax credit. And I always say that it's all about how much money you keep in your pocket at the end, and it's not about how much you're earning. You are working hard, but if you're not claiming R&D tax credits, you are leaving money on the table. If you are doing any research and development projects, and if you think that you are eligible, just schedule a meeting with us. Just submit a form. One, you can see the barcode in the bottom of the screen, and you can just schedule submit, fill the basic questions, answer to the basic questions. Then we will have a one-on-one call with you to answer to get clarifications on if there are any follow-up questions. Then we will guide you on the next steps. So we are here for you. If you need any help, you know our contact details. You can see it on the scrolling. On the scrolling, you can see all our contact details. We are happy to help you if you need anything. And if there are any questions, we would love to take up those questions. And if you're watching this recording later, not live, then feel free to post your questions on the YouTube channel comments box. We would love to help you on that. We'll wait for a
All
couple
right.
of minutes to see if there are any questions.
Okay.
Okay. Okay, I don't see any questions on the chat box. If there anyone has any questions, you know how to contact me. Just reach out to me. We are here to help you. And thank you very much. Thanks for joining this call. And thanks, Sarifat, for driving this call very effectively. Thank you very much.
No problem, Anil. Thank you. Alrighty.